Oh, thank you so much for joining us here on a Monday morning. I'm Marlon Bowling with you, your tour guide to the ag commodities. And we had a little bit of adventure in the overnight trade. In fact, I want to go ahead and just run through these prices here with our quotes provided by Bar Chart. Let's take a look at that corn market first. And in the big board, we had December finishing up a penny and a quarter lower. Now, we were at $4.94 and a quarter this morning. March was down 3/4 of a cent. Not a big move at all. Now, if you look at the soybean trade this morning, we ended up with the November contract 9 1/4 lower at $12.93. Much of your action now is in January, and that was down 10. 3.10 1/4 is the last trade there. That was about almost 12 cents off of its overnight high. Really struggling there. We ended up within 3 cents of our low of the overnight trade. Now let's switch over to wheat. And in Chicago, we had December 2.5 higher at 588.5. Well, look at that. It actually closed on the high of the overnight trade. It had been lower, but it came back and finished right at the top. Now on Kansas City wheat, you had December 4 higher at 674 per bushel. Same thing. It's about 7 cents, 6.5, 7 cents off of its earlier low. And look at where we are on the high of the overnight trade. So same thing, closed right at the top. On spring wheat, you had December up 7.5 at 738 1/4. Well, Shazam, same thing on the high of the overnight trade and about 9 cents off of its overnight low. So the wheat really seeing a strong performance last night. Cotton, you had December up 83 points at 83.23 per pound. So maybe it has finally slowed that descent we have seen here for a better part of a week. I want to bring in Brian Hoops, the Presidente of Midwest Market Solutions. He's in Springfield, Missouri. Hey, Brian, how are you?
Hi, good morning, Marlon. Good to talk with you. Hope you had a good weekend.
Yeah, I did. The market's a little bit, well, at least the wheat trade, let's say, was pretty enthusiastic here this morning, closing on the high of the overnight trade in all three classes. Now, what brought that about?
Yeah, there's not a lot of wheat news over the weekend. We were higher, led by Minneapolis, and there's a little bit of harvest that needs to be done yet, and we have this big snowstorm headed into the Upper Plains. So, market may be trying to price in that small percentage of the crop that's not been harvested yet may not be harvested with the snow that's coming in. So I think we're putting in a little premium because of that. In the plains here, southern plains, we're going to get some good moisture later in the week. It looks like that's going to be beneficial for that hard red wheat crop that's been seeded and is growing and wanting to go into dormancy in another 4 to 6 weeks. So that should be beneficial. And there just isn't that much other news, not much as far as export news for the wheat market. The dollar's a little softer, and so that's probably a supportive feature, at least for the wheat.
Okay, so that seems counterintuitive to me. If you have beneficial growing weather for the new wheat crop and then you have it go up and close on the highs of the overnight trade, that doesn't always seem to make sense.
So that's these markets. They don't make sense a lot of times. You can kind of rationalize the spring wheat crop being in jeopardy, but it's a very small percentage that hasn't been harvested yet. And this, in fact, may not get harvested if the snow hits those areas where they're still looking to harvest some of the crop. So, you can rationalize that. Corn and beans softer overnight, just lack of export demand, very poor technical close from Friday, and the dry area of northern Brazil that has not had rain for several weeks is looking to receive some rain this week, and then possibly a return to that hotter, drier pattern. So, if your producers out there that are making cash sales of soybeans or have made sales, weakness like this is probably a buying opportunity for those soybeans as a reownership. Look at doing some long call options. November options do go off the board this Friday. That adds to the volatility in deliveries starting against November futures a week from today.
I thought maybe the U.S. dollar index would have had something to do with the overnight action. And if you take a look at the U.S. dollar index futures here, I mean, it's pretty flat, not even down 100 points here this morning. So that seems to be a non-factor, doesn't it?
Yeah, it's not much of a movement. It is a little bit softer, but it's probably a minor influence to the wheat market this morning. Gold and silver are not getting much support off of this. Those are markets that really act inverse to what the dollar is doing. And gold's down $5.50. Silver's off 23 cents this morning. So they're not getting much support off of this slightly lower dollar either.
Also on crude oil, West Texas Intermediate crude oil, it's not offering any support in the outer commodities, I guess you would say. You have the December contract on West Texas crude now down $1.06 at 87.02. You'll note that the December is now on the top row. Well, we'll come back in a moment, and Brian will talk about the livestock trade. We had some big news after the markets closed last Friday. Had an interesting cattle on feed report. We'll decipher that when we come back. All right, we're back talking with the one and only Brian Hoops of Midwest Market Solutions. Well, you know, as we headed into the weekend last Friday, we closed up the daytime session of the markets, and then we got into the cattle on feed report that was released by USDA after the market closed. What did we find out? Well, Suzanne alluded to this earlier this morning, where we had kind of a surprising number. Let's take a look at what the results were on that cattle on feed report. We had the on-feed number, it was expected to be pretty even with last year, maybe slightly less. It came in at 101% of a year ago. And the placements was expected to be at 101%. It came in at 106. My goodness, 5 points ahead of the average trade guess. And then the marketings were actually a little bit weaker than the average trade guess. Trade was looking for 90.4. It came in at 89%. So, Brian, that seemed to really throw a curveball here to the markets, at least for what they have to consider this morning. I want to take a look at how we finished up last week. Let's bring up these quotes from bar chart. Now, we did have a real big sell-off last Thursday in the cattle complex, and we had follow-through selling on Friday. So December live cattle were down 67 on Friday, but all the other months beyond that were over $1 lower. And if you recall, on the feeder cattle market, we were over $5 lower on Thursday. Well, Friday, we closed over $2 lower across the board beyond October. For example, November was down $2.27 all the way down at $2.42.22. That was before the report came out. So now, even though it was a bearish report, Brian, did they already have it factored in? What do you think?
Well, I think to an extent, some of it was factored in. The technical selling we saw Thursday and Friday that you mentioned kind of softens the blow of this cattle report. I'm looking at the bid ask here as we went to break. We're looking at 60 to 80 lower based off of bid ask for an opening call this morning after this report. So certainly the placement number was a huge miss, not just a small miss, it was a big time miss. And that, doesn't bode well for those, spring, summer type months. Most of the selling pressure is probably going to come in those months to this morning, but other news has been pretty friendly. Cutout values trying to move higher on Friday. Big slaughter pace last week compared to expectations, 638,000 head killed. Cash trade $1 to $2 better. So outside of the cattle on feed news, all the other news is somewhat supportive. But initially, we're going to react to the cattle on feed news, probably 60, 80, maybe 100 type lower opening, and then see if there's some technical or fund-related buying that comes into the market to support it. But I do think the big losses we saw Thursday, Friday is going to minimize the impact on the futures market this morning.
All right, and just to recap where we finished on lean hogs last Friday, we were actually lower there too across the board. December was down $2 at $66 even, and that was pretty consistent across the board. All right, we'll see if they rebound or if they have more selling today on the open. Brian, I appreciate all the comments this morning, and we'll talk with you again here in the next couple of days. Brian Hoops, and he is with Midwest Market Solutions. He is in Springfield, Missouri. So